We are likely to see Nifty Bank outperform versus Nifty IT index. But let's talk about Sensex and where is the benchmark headed from here on? Kunal, what are the latest support and resistance levels that you see for the benchmark indices currently at 54,100 odd levels?
So I think 54,000 is an important support for Sensex, and that also coincides with the 50-day moving average. So what has been happening is that many of the indices have managed to now float above the 50-day moving average for themselves, and they're getting into their own patch of small minor consolidation for themselves. So for Sensex, it's 54,000 approximately as a support on the downside, which also coincides, as I said, with the 50 DMA. And on the upside, the 2-day high for the Sensex, which is around 54,650, 700, that seems to be a resistance. So it's a very minor kind of a trading range, 1%, 1.5% for the Sensex, 54,000, 54,700 as a range for itself.
Okay, that's the view coming in on the indexes. But let's start with our let's start with the BNSN queries. And obviously, we will be taking your queries on, we have Kunal on the technicals front, as well as we have Mr. Chokalingam also joining in with us. Thank you so much, gentlemen, for joining with us this morning. And let me start with you, Mr. Chokalingam. I do want to start with the first query coming in on blue chip stocks, and this is a broad-based query coming in from Omkar. If you had to suggest any blue chip name as of now, which would that one be for the period of around 2-year holding?
Start investing right now, then you should look at FMCG sector because that's what happened in the last interest rate hike cycle when the US Fed aggressively hiked. The FMCG sector was the one sector which withstood the meltdown. So therefore, I would suggest stocks like HUL and Nestle from the conservative point of view.
This one is from Mr. S. Ghosh Kunal, and he's a senior citizen, and he's actually been writing to us quite often about 63 moons, and he's not been getting an answer either on the fundamental side or the technical side. But do you have a query on do you have a solution for him on this one? 2,500 shares of 63 moons purchased at 172 rupees per share. He wants to know what should he do, continue to hold on to it or add some more.
Well, I frankly don't track the stock that closely, but then when I look at the longer term charts and I'm talking about it from a monthly scale perspective, the stock seems to be now getting into a zone where it's found a lot of support. So 150 approximately has been a very good support for 63 moons over the last 2 or 3 months of the price correction for the stock. It's managed to withstand and bounce back from those 150 odd mark for itself, which means it's now trying to cap a floor at those 150 mark. Now what matters is that how strong the trend is for the stock over the near term. So for example, in last 2-3 weeks, it's been unable to cross the 200 moving average. So it's trying to break past above resistance, but it's not met with a very strong force of buying for itself. So I would expect that such kind of a stocks, you should ideally wait for a minor pop in terms of trading. If the stock say jumps up 10-15 rupees from current levels, that could be a good time where you can look to exit and then buy it back once the stock corrects back towards that 150 odd mark.
Okay, Mr. Chokalingam, coming to you, we have the next query coming in on Amrutanjan. Kaustubh wants to know whether it's a good time to buy the stock for a long-term period.
No, this Amrutanjan fundamentally there is no comfort at all in terms of valuation. So whenever it gets beaten down very badly, that is a time you should do it, and you should book out as soon as he gets a 20-30% profit. But right now, I would suggest him to wait. If it falls at least another 10-15%, then only he can consider entering Amrutanjan.
All right, this one is coming from Raj. He's writing to us from Bengaluru, and this one is especially for you, Mr. Chokalingam. He's saying that you're his favorite analyst, so he wants to ask this query to you. And this one is on Sumitomo Chemicals. He wants to know whether it makes sense to buy this counter right now for the longer term.
Thanks for being my follower. And it's a great stock, the Japanese subsidiary in India. But the valuation is also great. So if he's holding, he can even start booking profit beyond 520, 530. But if he wants to buy, I would suggest him to wait unless the stock sees at least a 10% correction. He should not enter because valuation is extremely rich.
Okay, that's the view on Sumitomo Chemicals. But Kunal, coming to you, we have a query coming in from Mr. Gupta, and this one is on IEX 165 call. Should they be buying it at the current market price?
I would suggest an avoid. It doesn't make sense. So there are two important points you have to consider. One is that the markets are consolidating and the mid-cap end of the market is getting into a strong trading range for themselves. But IEX has not been a strong performer. It's been a very weak performer in the last 3-4-5 months. And specifically, I think the correction which had happened for IEX in the last 1 month was quite intense. So it may not be the first one to get into a recovery phase. It may actually turn out to be a last stock or last group of stocks which can get into a recovery phase. So you may not want to bank onto a chart which is weaker enough in a market which is consolidating. I would suggest an avoid.
All right, this next query that I have is also for you, Mr. Chokalingam, and this one is coming from Krish. He wants to buy and hold for the next 3 years either Phoenix Mills or Oberoi Realty. Which one would you suggest that he should go ahead with?
I would suggest Oberoi Realty because balance sheet is very strong in terms of the equity debt leverage, and brand is much stronger in the residential realty space. Thirdly, new commercial complexes are coming up. And already the metro station got commissioned near its property, which is not noticed by the market in my view. So it has got a huge short-term potential itself. So therefore, you should consider Oberoi Realty.
Okay, Kunal, the next query we have is coming in on NOSIL. Now, Mukil is holding NOSIL at a buy price of 268 rupees. 1,000 quantity is what he's holding. What is the near-term or short-term target for this one?
So I think the stock has already crossed those target levels of 280 approximately. 284 was the high which I think NOSIL made today, and it's seeing some profit booking from those levels. My suggestion is that if you bought at 268, you should look to book out profits over your majority of your profits at least at those 278 to 80 odd mark where the stock is trading right now, because I would believe that the stock would now get into a marginal correction / consolidation for itself.
All right, this one is coming from Subhash Suryavanshi. Is writing to us from Ahmednagar, and he's saying that he's bought about 1,000 shares of Syngene International at a price of 581 rupees per share. He wants a view on the medium to longer term. How does this one look to you, Mr. Chokalingam, Syngene International?
The reason it has crashed is the valuation was also extremely rich. But now if he is holding, he can hold it. He can exit around 600, 620. That's a fair valuation for Syngene International.
Okay, Kunal, we have the next query which is coming in on ITC. Neha is holding 150 shares of ITC at 228. Should one be looking to book profits now or wait, and can they continue to hold for a 3 to 6 month period?
I think congratulations to the viewer, because if you bought at those 228 odd levels for ITC, then you're sitting on some very good profits. And I think more importantly, that 225, 230 mark or that zone was the zone where the stock had actually started to get into a turnaround mode. I think you've stood on to the stock price in terms of the trends quite exceptionally well. Now is the time where I believe that the stock may get into a range kind of an action for itself. But the momentum could be far more higher and stronger than what it was when the stock was sub the 250 mark for itself. So you would not want to get an exit early into the stock price, because it's possible that if this momentum sustains, say for the next 3 or 6 months for ITC, the stock can not even cross the 300 mark, but even try and challenge the all-time high levels of 340, 350. So a much better strategy is, in case if you are in some requirement of capital, then you can maybe book out 25%, 30% of your holdings which you've bought at 228 odd levels, and then trail the stop losses for the balance quantity.
All right, this one is coming from Sandeep. He's writing to us from Noida, and he's asking, out of the following stocks, which one looks good, or rather he's asking, are these counters good for the longer term? So he has Bajaj Consumer, about 100 share he purchased at 250, Wellspun India 100 shares purchased at 120, and IEX 500 shares at 210 rupees. So Mr. Chokalingam, are all these three counters good to stay put with for the longer term?
Longer term Bajaj Consumer is good, but it's suffering from the input inflation. It uses input which are a derivative of crude oil. So therefore, I would not advise him to buy now. He can rather wait for some more time. He need not book the losses because the brands are too good. And as far as IEX, the energy exchange, is concerned, I have an interesting view. This company had a monopoly status in the energy exchange. now which is getting threatened. Recently, Bombay Stock Exchange has announced to starting commissioning the energy exchange business along with the PTC India and other utilities and power producers, which is a big negative. And earlier we had seen media reports of NSE also starting energy exchange. So the monopoly status getting dismantled and it's becoming a monopolistic. And unfortunately, NSE, BSE, cash-rich companies, and they've got diversified business models. So what happened to Geo success can happen to NSE, BSE at the cost of IEX. So therefore, if any revival comes, stock improves even 10-15%, you should sell IEX.
Okay. Kunal, we have the next query coming in on Hero MotoCorp. This query is coming in from Prashant, who's from Bangalore. Is holding 40 shares of Hero Moto at around 2,850 rupees for the last 1 year. Now, finally, it's showing some green is what he's saying. Should they continue to hold this one or sell?
I would recommend to hold on. I think the auto cycle and the auto trend is getting into a resurrecting mode, if I can use that word. And I think many of these auto stocks have done exceptionally well for themselves, starting with M&M, then TVS Motors, and now with the likes of Maruti, Bajaj Auto, Hero MotoCorp. They're also trying to pick up good pace for themselves. So I think if you've managed to hold on to these stocks, and these are quality names, it's not something to be fretted upon where these stocks get into a correction of 10-20%, and you would probably want to be selling these stocks in in sort of an anxiety mode. So I would expect these stocks to do pretty well for themselves, not just over the next 6 months to 1 year, but even from a longer term basis. I would suggest to hold on. And if you have a time frame of which is, say, for example, 1 year approximately from current levels, I would suggest a target of 3,300 plus on Hero MotoCorp.
All right. This one is coming from Rahul Kaji, and he wants to know if Infosys and Vedanta can be bought at current market price. Kunal, either on Infosys or on Vedanta?
Infosys, yes, I would recommend that as a buy. I think it's come back towards a good support zone. 1400 has been a time-tested support now for at least the last 2-3 months for Infosys, where the stock managed to tried to challenge the 1400 mark for itself, but twice it's managed to recover from those levels, which means it's trying to build in a good base or a support for the stock at current levels. But then, as I showcased earlier at the start of the show as well, that possibly the IT stocks may consolidate or correct for the next 6 months to 1 year, but more from a longer term basis is where you might see these stocks doing pretty well. If you can shift towards banking names, that's where I believe a better alpha or returns could be generated if your time horizon is a bit restricted.
Mr. Chokalingam, the next query we have is coming in on KPIT. Hemanta has bought KPIT at around 557 rupees per share. Now it's 497. So what should he be doing? Continue to hold this or book some losses now?
Hold. The punishment meted out to the IT sector, in my view, is too much, and they don't deserve. Just because Nasdaq stocks are falling, here we are seeing our IT stocks falling. But the business models are largely different for these two set of companies. So therefore, I am of the view that ultimately with rupee depreciation, most of these beaten down IT stocks would start improving their valuation. So therefore, he can hold on to KPIT. But I won't advise him to add. If he wants to add in IT space, according to me, Cyient is the best to stock in terms of valuation, balance sheet, so he can consider adding Cyient.
All right, this next one is coming from Ashwin, and this one is for you, Kunal, and Ashwin is writing to us from Hyderabad. He wants to know HAL or BEL, which of this is good one to buy afresh for a period of 6 months to a year?
Well, I would suggest BEL if your time horizon is 6 months to 1 year, and my sense is that BEL has could stand out to be a strong performer. It's been a consistent outperformer over the last 1.5 to 2 years from the pandemic lows. When the stock was almost at 60 rupees or 65 rupees, it's done pretty well. It's one of the top performing PSUs from those lows as well. So I would suggest BEL as a much better alternative.
Mr. Chokalingam, the next query is coming in on HDFC Bank. Now, Mangesh wants to know if you could give a 3 to 5 year view coming in on HDFC Bank, considering that there will be a merger that they're looking at. So, in terms of that, how are you looking at HDFC Bank?
Definitely, he can hold, he can add, because even the management said that every 5 years the business should double, and even if you go by 18% annual profit growth year on year, in 3 to 5 years the book value should double, the profit should double, and even if you keep the same beaten down valuation multiple of price to book value around 3.5 to 4, the stock should double. Even if the short term looks good for HDFC Bank because the credit growth has picked up to strong double digit. And also the whole banking sector is likely to do well because the monsoon also improved a lot. The inflation is also going to start falling because of the base effect and also because of the steep fall in the material prices and food prices. And in another 5 to 6 months, the whole Indian market will forget the inflation. So therefore, this is the time to buy the best banking stock like HDFC Bank.
Okay, this one is from SK Patnaik. He's writing to us from Odisha, Kunal, and this one is for you. He's saying that he has Reliance 2400 put option for July, purchased at 80 rupees. Now it is at 52. Wants to know what should he do?
Well, I think you can continue to hold on. I think Reliance seems to be showing some sort of a weakness in terms of charts. It's not breaking the 2400 mark, but then evidently the stock is also not participating on the upside. So in case if the market gets into slight volatile phase, then I believe Reliance could be the first stock which may get into a correction phase for itself. Stop loss for this trade, I would probably place it in terms of the stock levels. So 2460 on the spot, for Reliance could be a stop loss for this option trade.
Mr. Chokalingam, coming to you, we have the next query coming in from Amit, who's from Delhi, and he wants to know what's your view coming in on Sona BLV, a long-term view?
Valuations are very rich. In case stock falls 10-15%, then you can consider buying for long-term.
Okay. Mr. Chokalingam, this one is coming in from Sunny, and Sunny wants to know if VA-Tech Wabag is a good investment for the longer term, and also he wants to know at what price can he look to enter this particular counter. Do you think that this one is a good bet and now is the right time?
So I have been avoiding this stock for last 5-6 years, ever since I noticed some stress coming on working capital. So I would personally avoid this stock.
Kunal, we have the next query coming in for you, and this is from Dheeraj on Wipro. Now, what he's talking about is Wipro has acquired the Germany company and is also rising. Will Wipro actually become a multi-bagger going forward? He's currently got it at 370 shares at 598 rupees. So what's your view coming in on Wipro? Should he look to accumulate more?
See, I think the prospects for Wipro going forward could be very attractive, and I think the stock, was one of the late starters in the post-COVID rally for IT names, and then it managed to catch up quite well. I think there was a phase where Wipro was amongst the top 2, top 3, large cap performing IT names, from those 2020 bottoms for itself. But somehow in the last 6 months, 7 months, the stock has fallen also very sharply. So from a high which is around the 720 odd mark for Wipro, the stock is now inching towards a break below the 400 level. So 410, 412 is where the stock is currently trading. So there has been evident weakness into the stock price. And as I showcased earlier, that possibly these IT stocks, they can continue to drag for at least another 6 months to 1 year approximately. So I think in that aspect, if you have a longer term time horizon, then only it makes sense to add on to Wipro. You can add at current levels of say approximately 400 and keep some powder dry in case if there is any sharp correction or capitulation closer to that 350 mark for Wipro.
Okay, this one is for you, Mr. Chokalingam. This one is from Meena, writing to us from Chennai. I wants to know if all cargo is a good buy at current market price for the longer term.
Definitely. I mean, if he's holding, he can hold. Entire logistics space would again start improving the valuation once the oil prices start falling and inflation start moderating. So he can continue to hold it.
Kunal, we have the next query which is coming in on Galaxy Surfactants, and this query is from Jay Krishna from Kerala. They are currently holding the stock at 3,036 rupees per share. So for the medium term, what is your view coming in? Should they hold, sell or average? And if exit, please suggest a stock that they could enter if you suggest exiting this one.
I think you can continue to hold on to the stock. The only catch with this name is that it's an illiquid name. The daily volumes, when the stock consolidates, is just about some 8,000, 10,000 shares. At least that's what I can see on the NSE. So, it's a thinly traded counter, so you have to be very mindful of that. But then, the chart patterns are quite okay. The stock today has confirmed a breakout of 200-day moving average. I would suggest that if you can look at it from a very near-term perspective, my target range for Galaxy surfactants would be closer to 3,180, 3,200.
All right, this next query is coming in from Puneet. And Puneet, yes, we did not ignore your queries. Just to let you know, we are like flooded with queries. So yes, have to do justice to each and every viewer who writes into us. And this is Puneet's query. He's saying that he's bought Tata Motors at a level of 430 rupees per share. Kunal, his targets that he has is around 444 to 450 rupees per share. He wants to know by how long will actually Tata Motors take on the charts, if you can plot it, to reach these levels?
So I think 444, 450 mark would probably also coincide with the 200 DMA. I think if I'm not wrong, 2 days back the stock had made a high which was around this 444 levels, and now the stock is getting into a natural phase of correction / consolidation. So I would expect that possibly over the next 3 to 5 days the stock can retest that 445 mark for itself. Now whether it surpasses that 445 mark, whether it tries to cross over that 200-day moving average, that could be a bit of a wait and watch kind of a scenario. But yes, the charts look quite okay for Tata Motors, and if you've bought at 430 levels, I would suggest that you can keep probably a trading stop loss of 425 and hold on to your short-term trades.
Mr. Chokalingam, coming to you for the next query we have is from Amruta, who's asking your fundamental view coming in on Tata Investment Corporation. Is it a good time to buy this one at the current market price for a long term?
Certainly for long term it is good. I looked at it. It has got a very decent discount to value of investment it holds. Interestingly, it holds non-Tata group companies also. But the only point is that in a market like this, when it is correcting significantly, the holding companies generally don't do that well in the short term. So therefore, the investor need not hurry to accumulate. Slowly one can accumulate over next 2 to 4 months time.
All right, this one is coming in from, I don't have the viewer's name, but Kunal, this one is for you. And it's a bit of a longish query, so let me read as the viewer has written. He bought about BPCL, about 100 shares at a price of 465 rupees per share. Wants to know what to do with this counter, hold, add or exit, looking to wait for the next 6 months for a better level to exit. Also wants to know that about the crude oil prices when it's not gone ahead, and why the stock has not risen during these particular times when the crude prices have risen, and as well as GRM. So he wants to know in comparison with Chennai Petro, MRP and RIL, does it make sense for him to stay put with BPCL? No doubt, too diverse way of functioning when it comes to oil marketing companies as well as refining companies. That's the reason why you see opposite direction movements in these counters when there is a movement in the oil prices. But what should he do? Stay put with BPCL, add more, or should he look at the other companies altogether?
Well, I think, Shell, I think it will be very prudent that I'll take the first part of the query, and second part, I think, on the crude oil prices and the effect of that, I think I'll leave it to, Mr. Chokalingam. So I think on the first part, I would suggest that you should probably try and look out to exit BPCL. It's been a big underperformer stock. So, there was a lot of hope that possibly the disinvestment could probably, try and have some positive triggers to the stock price, but that's also not helped the stock get into a breakout mode. It tried to come back towards 500, 550 mark, but it failed to convert that, rally or the possibility of breakout, and the trend fizzled out quite, swiftly for BPCL. So I would expect the stock to get into a drag mode, and I think that would be the case for the other OMCs as well. So if you've already invested at higher levels, I would definitely not suggest an averaging, and if possible, any kind of a minor rally which you get, you should look out to exit.
Okay, Mr. Chokalingam, coming into you for the next query. We have this query coming in on Nalco. Rajagopalan is intending to buy Nalco with a long-term view of almost 3 years. What is your view coming in on this one? Fundamentally, how are you seeing this stock?
I think this is a right time to go aggressive on stock like Nalco. Yes, aluminum prices have fallen 36% from the recent peak, but Nalco is an exceptional stock. It got a huge cash, and it has got backward integration to both bauxite and alumina, and it's also paying very good dividend yield. And normally the metal stock one should purchase in a bear market like this. And also, let us not forget the fact that Adani Group started Adani Aluminium. Of course, I am not unnecessarily making any forecast of take over all that. But what I'm trying to say is that there is a scope for further consolidation in the aluminum industry, which would be favorable to NALCO. So therefore, one can quite aggressively, accumulate at the current price.
Okay, this one is coming in from Shravan from Ahmedabad, and this one is for you, Mr. Chokalingam. He's holding BEL 100 stocks at a price of around 230 rupees per share. He wants to know whether it makes sense to add more or look at other defense bets for a period of around 3 to 4 years. Do you think BEL is the best bet in this defense pack, Mr. Chokalingam? Or which other defense names can Shravan look at?
I would avoid the defense PSUs at this point in time, along with the oil and gas companies belonging to the government, because we have seen what happened to the oil and gas companies. And we also seen a couple of years back what happened to the operating margin of BEL. It had to sacrifice margin while supplying to the defense sector. So since the government's budget conditions are quite under stress and fiscal deficit still remains at the elevated level of over 6%. So there is a possibility of, once again, defense PSUs like BEL being requested to make some compromise on the margin. So therefore, I would avoid PSUs in these two sectors for time being. You can look at private companies, private banks like ICICI Bank or HDFC Bank, or the FMCG stocks like Hindustan Unilever or Nestle for time being in the short term to avoid any possible risk.
Kunal, we have the next query which is coming in on Tata Steel, and Ramesh has bought 650 shares of Tata Steel at an average price of 1,200 rupees per share. Now he wants a short-term view of around 3 months. How are you expecting this one to move in terms?
So I would believe Tata Steel should consolidate over here. I don't see any major trigger on the upside for the stock. I think over the last 1 month, metal stocks have been a bit of a, very, I would say, tepid outperformers, or tepid, sectors which have rallied. They've been very meager kind of bounce for these stocks. For example, for Tata Steel, the stock bottomed out close to that 850 mark, and the stock till today or yesterday's close was around this 900 level. So just a 5%, 6% bounce as compared to a 10% to 12% bounce on an average for the other high beta sectors. So I would expect Tata Steel and such metal names to consolidate for at least the next 2 to 3 weeks, if not more.
Okay, this one is coming from Sushil, and Sushil has been writing to us quite often, and we've not been able to take his queries. Apologies for that, Sushil. But M&M Finance is the counter that Sushil is asking query on. 900 shares purchased at 148 rupees per share. Wants a short and a long-term view on this one, but since we have paucity of time, I will ask you, Mr. Chokalingam, how does M&M Financial look over the longer term? Does it make sense for Sushil to stay put with this holding? 900 shares purchased at 148 rupees per share.
So longer term definitely looks too good coming from Mahindra Group, and also the way they have done in the lending growth recent time. He can continue to hold for long term. Short term, I am not confident, but certainly for long term, he can hold.
Kunal, we have the next query which is coming in on Greaves Cotton, and Tripta has bought Greaves Cotton at a price of around 200 rupees. Can she be expecting more upside coming in for this one?
Well, at least from a very near-term view, I don't see any major upside coming out for Greaves Cotton. It's trying to establish into a trading range for itself. So last one and a half odd month, from the May lows when the stock was at 130 mark, it's now trying to grapple into a trading range. 160-65 is a resistance point, and the stock has tried to test this level twice, but it's failed to cross over those 160-65 mark for itself. So I would expect the stock to consolidate over here. A better strategy is wait for the stock to come back towards 130, average, lower your cost price, and then look out for an exit which should be closer to 165, 170.
Okay, this one, Denny Matthew, he's writing to us from UK. Voltas call option 980 at 32 rupees. 2 lots with July expiry is what he has. He wants to know whether he should continue to hold or exit, Kunal.
I would suggest an exit on Voltas call option. I don't sense the stock would get back into the thick of momentum at least anytime soon. So I would suggest an exit.
Okay. Mr. Chokalingam, coming to you, we have the next query coming in from Shiva, and this one is on Nava Bharat Ventures. What's the fundamental view on this one, and can they look to make fresh investments in this one for the long term?
Now Bharat Ventures, I mean, somehow I am not in favor, because the stock price as well as the fundamental performance, business performance keeps fluctuating widely over the years. So if he has bought it and losing money, he can hold on. once a small cap segment as a whole starts improving, and then you can consider exiting the stock.
Okay, this next one is coming in from Kumar. He's writing to us from Oman, and he wants a view on Manali Petro Chem for the longer term. What's your take on this one, Mr. Chokalingam? Do you think it's a good bet to bet on for the longer term?
Yes, Manali Petro, I looked at the business model. It is good stock for the long term.
All right. The next one that is coming in is coming from Mr. Harish Chandra, and he wants a view on Tata Steel. He already has 10 stocks at a price of around 1,247 rupees per share. What's your take on this one, Kunal? I'm unsure if Vinny has asked on Tata Steel earlier.
So yes, I did answer on Tata Steel, but then again the view remains the same, that the stock would consolidate for at least the next 2 to 3 weeks. I would expect 800, 900 to be a broad trading range for Tata Steel. So I would not recommend an averaging out in this zone of consolidation for the stock.
All right, Mr. Chokalingam, the next one is a tricky question for you. This one is coming from Sriram, and he wants to know, can we expect a rally in Biocon based on fundamentals?
Possible. In fact, I looked at it intensively. The rally is possible, but I'm not forecasting right now. It depends on how this, it's a subsidiary, biological company does after they take over Viatris. And things look positive because they're tied up with the Serum Institute and they have the marketing rights. So I am sure that current price is near rock bottom. One may not lose more than 5% or 7%, but upside, quite huge upside is also possible. But to make that statement, we need another 1 quarter at least to understand its performance in biosimilar and also performance from the newly acquired company. So one can definitely, since the risk and rewards are in favor of the stock, so one can hold it, one can even add at current levels.
This next query is coming from Mr. S. Krishna Kumar. I know, Mr. Krishna Kumar, you have asked this question to Mr. Chokalingam because you've bought, in May, you bought into Bajaj Finserv stock when the stock was trading at around 15,900 mark, and right now it is below 12,000. You know that fundamentally the stock is very strong, but you want to know when the bounce back is expected to around 17,000 levels. So Kunal, I will take this question to you. On the charts, where can you see a bounce back coming for Bajaj Finserv? We know what happened in the month of May to the markets. And yes, Bajaj Finserv fall also may have been linked to that. From now on, where do you see some sort of a bounce back coming on the counter?
So on the longer term charts, the stock has a very strong support, and I'm talking of it from the last 8-10 years of the chart history, which is closer to a strong moving average. Now that's a Fibonacci number moving average, and the support coincides closer to that 10,000 mark for Bajaj Finserv. The stock is at 11,800 approximately currently. My sense is that possibly over the next 6 months to 1 year, the stock may consolidate at this 11,800 odd mark, and assuming if there is any kind of a downtrend towards that psychological 10,000 mark as well for Bajaj Finserv, that should be taken as a very good opportunity to try and chip in or buy the stock at current levels, because that would be a very strong risk reward zone for Bajaj Finserv. So I would recommend that keep some powder dry, wait out. Assuming if the stock gets into a corrective phase closer to that 10,000 mark, you should definitely look to average there.
All right, with that, let's kickstart with the rapid fire then. And over to you, Mr. Chokalingam. The first question coming in from Kiran Chopra, a senior citizen from Lucknow and is a long-term investor, wants to know between HDFC and HDFC Bank, which would be a better bet to pick on, given the fact that the merger is at play?
I mean, the ratio would adjust for the market price, so it won't make much difference. Still, you can consider HDFC Bank.
All right, this one is coming from Aarti, holding 4 fertilizer stocks in the portfolio. About 5% of the portfolio is on fertilizer counters, but wants to know whether it makes sense to add Chambal fertilizer as well to that kitty. Does it make sense, Mr. Chokalingam?
One can hold on. I am quite negative because of input price rises, government budget condition, and also the government focus on organic fertilizers instead of chemical fertilizers. So therefore, I won't advise adding more now.
All right. This one is from Nitin, and this one is for you, Kunal. Ujjivan is the counter. He has been holding onto it for the long time, but wants to know right now whether should continue to hold or sell it.
I would suggest to hold on.
All right. Devesh Gandhi has a query on Eicher Motors. 500 shares is what he's holding of Eicher Motors. He's not given the buy price, but nevertheless, Kunal, how are the charts looking for Eicher?
I think it's looking extremely strong to me, and I would definitely recommend a hold on Eicher.
All right. Mindtree versus Persistent. Godfrey wants to know which one is a better bet for the longer term, Mr. Chokalingam.
Cyient is better than both. In terms of valuation, it is at a steep discount to both the Persistent and Mindtree.
All right. Bharti Airtel is the counter that Ramesh has, around 120 shares at a price of around 680 rupees per share. Kunal, what should you do with this one?
I would suggest to hold on.
All right. Venkateshwaran wants to know whether NMDC, is this worth buying? What's your take, Kunal?
Well, yes, I believe closer to that 100 mark is, I think, a good buying range for NDC. It's found some good support for itself on the longer term basis as well.
Okay, Jyoti has UPL 200 shares at a price of 830 rupees per share. Wants to know whether should continue to hold on to this one or exit. What's your take, Mr. Chokalingam?
When the stock price nears its cost price, you can exit, because the balance sheet is not that comfortable to me personally.
All right, and with that we come to the end of the rapid fire, or should I say the breathless round. Thank you so much, Kunal, as well as Mr. Chokalingam, for joining us on the show. And thank you, Kunal, for explaining the dynamics between Nifty Bank as well as Nifty IT and where both of them are headed. But viewers, we will be back tomorrow with our query segment, so don't be disheartened if we've not taken your queries, though we've tried to fill in as much as possible. But we will see you tomorrow at 11 a.m. with the query segment. But for now, BNSN continues after this break.
You everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.